Welcome again to our followers. This is Fidel Bisford, and it is still entrepreneurship, entrepreneurship for senior six, and we're still on unit one, which is ledgers and trial balance. Our session today is for the sales ledger or the debtor's ledger. Still on unit one, which is ledgers and trial balance. So the sales ledger or the debtor's ledger accumulate information from the sales journal. And the purpose of the debtor's ledger is to provide knowledge about which customer owes money to the business and how much those customers or that customer owes to the business. This is achieved by posting information from the sales journal to the debtor's ledger. So here are the meanings of the key concept used for the credit transactions. When we say sundry debtors, the word sundry means various kinds or of several or miscellaneous or diversified. So when we say sundry debtors are various individuals or entities that owe money to a business for goods or services purchased on credit. Why the sundry creditors are various individuals or entities or suppliers of goods and services the business or company owes money to. We have an example here. Enter the following transaction to the sales day book of Alain. Post them to the sales ledger for the month of January 2016. On 5th January, credit sales were made to Peter worth 10,000 francs. On 6th January, Alain issued an invoice to Tom, 20,000 francs. 9th January, Alain made credit sales to Mobilu for the goods worth 16,000 francs. On 17th January, Alain gave out an invoice to Emma indicating 10,000 francs. That is on 17th. Then we are required to enter the information to the sales day book of Alain and post them to the ledger. Alain sales journal or sales day book for the month of January 2016. Alain's made credit sales to Peter. Of goods worth 10,000 francs. January 6th, Alain's also made a credit sales to Tom for the goods worth 20,000. The SL, this is the sales ledger, the reference. On 9th, made credit sales to Richard for the goods worth 16,000. Then on 17th, made credit sales to Kelia with goods worth 10,000 francs. And remember, the total will be transferred to the general ledger and an account called sales account, which is opened under general ledger. This is it. Then this is it. Then we have here an account of debtors, the debtors ledger. Peters, a data Peter. Sales ledger 1. Remember to just write all this information. For the debtors ledger, we have to debit their account since we are increasing the assets account, the data account. Peter, a data is an asset for the business, though money is not paid automatically, but on an accrual basis, a debtor pays money, so the debtor is taken as an asset. as a current asset to the business. Then under the details here, we indicate sales, and the amount is 10,000. Then we balance it off automatically, so 10 here. After putting the balancing figure on the credit side, then we write the totals at the end of the month. That's January. Then we draw two parallel lines. After drawing two parallel lines under these totals, we write the balance brought down. Because a debtor is an asset, the balance brought down comes to the debit side. We have here another debtor called Tom. Amount, 200 franc, debt, details, ledger folio, amount with the currency in bracket. Then on 6th, there is another credit sale made to Tom, to debtor Tom, was 20K. Now we balance this one off. Balancing this off, we need a balancing figure which is equal to 20,000 on the credit side as a balancing figure which is balance carried down. Then we sum up the debit and the credit side separately to find the totals and make sure that debit and credit sides are equal. Then below we have a balance brought down. This balance carried down changes the side to be called the balance brought down for the next month. Is carried forward to the next month, but the balance is named balance brought down is 20K. Another data account is for Richard. A debtor Richard also owes the business this amount of money, 16,000, on sales made on 9th November. Then we balance it off. So we need a balancing figure of 16,000 this side for us to have the total of 16 on credit and total of 16 on debit. Then we draw two parallel lines for us to indicate that debit is equal to credit. Then below these totals, we bring the balance, the other balance carried down, but with each with a changed name, that is balance brought down of 16,000. Another account for a debtor is for a debtor called carrier. Debt details amount, debt details ledger for the amount. We have to debit, we are increasing a debtor asset. So the 10,000 100 francs is also owed by carrier to the business on sales made on 17th November 2016. Then we balance this off. We need 10,000 as a balancing figure on the credit side. Then we sum up this side and this side, 10,000, and we draw two parallel lines to indicate that debit side is equal to credit side. Then below these totals, we bring the balance brought down on debit, which is 10,000. The balance brought down on a different month, that is February, yet the transactions were for January. Then in the general ledger, that's where we shall have to credit the general ledger with the total of all debtors, that is 56,000. The sundry debtors, 56,000. Then we need the balancing figure of 56 for us to have a total of 56 here and 56 here. Then the balance brought down on sales. Sales, this is a revenue account. So it comes to the credit side as the rule stipulates, as the rule provides. So this is the end. Bye.